Hello, everybody, and welcome to the encore presentation of our Budgeting Club Leadership webinar. All these leadership webinars are sponsored by the generosity of SRAM. So thank you, SRAM. I also want to thank our presenter, Ron Puett, who's done now 3 of these webinars for us, including this being the second of the budgeting, because we couldn't record the last one, which was on November 3rd. So we're running it again, and I know that the attendees who couldn't make it on the 3rd but are here tonight want to thank you as well, Ron. I didn't introduce myself formally on the recording. I'm Scott Williams. I'm the Membership Director of the League of American Bicyclists, and I'm very pleased to have all of you and Ron Puett from the Kansas City Bicycle Club here with us tonight, presenting on an important topic, budgeting. Ron, please take it away.
Okay. My name is Ron Puett, and I'm with the Kansas City Bicycle Club, and tonight's topic is on budgeting. I wanted to make a note that this session will hopefully incorporate concepts that were presented in the 2 prior, that being succession planning strategies and memberships. So we're going to see some tie-ins on those. First, we're starting off with a puzzle or a brain quiz. Translate the following phrase into a common phrase. Eleemosynary deeds have their incipients intramurally. So while you're working on that, first question is, have you completed the Lab Club survey? There is one out there that they've put together to gather information about the various clubs. We would encourage everyone to take it because it helps track information about the clubs. The last survey was done in 2006, so that if we can get refreshed data, it will help presentations like this one. You're not allowed to take it twice, so there is some information that you may need to prep that you may not know. Scott, I don't know, you may have some list out there that would give folks the questions, but I encourage everyone to take the survey because it's we're going to use it here tonight. In 2006, the survey results came back from 325 members that the average membership fee was $17. Clubs are doing about 250 rides, and they had, on average, one large ride with 600 participants. 2/3 of those clubs stated that they were incorporated, and of those, 1/3, or that would break down to about 22% of everybody, were 501c3s. Average club had a $40,000 annual budget, and there's some other information down there that talks about some of the more extreme attributes of the clubs. The answer to the quiz was charity begins at home, and the reason I had to have that is it's used on this next frame, which is the Kansas City Bicycle Club averages. We have 308 members, 235 households. Our membership dues are $20, $25, and $30 for individual, family, and sustaining. We put on 3 rides, grossing with memberships about $20,000 to $25,000. The 2006 lab survey had the following expenses listed in order of magnitude. Insurance was the largest expense. The newsletter was the second largest, followed by merchandise and then ride expenses. I did ours for the 2005 and 2009 year. Since that would be closer to the survey, I wanted to get something closer to 2006. So 2005, we actually had equipment. We bought a trailer, so that kind of trumped our #1 expense spot. But then we had newsletters as we were matching the lab survey on that respect. And then we got into food for the rides and charity. In 2009, last year, it was eleemosynary. Charity giving was the #1 expense, followed by food for the rides, then merchandise, and then equipment. So what we're seeing there is newsletters have fallen off the grid, and I'll have more on that later, but I think what everyone's doing now is posting their newsletter online. Okay, so budgeting. We're really probably talking about financial statements. And why do we do them? Well, hopefully everyone is getting a monthly treasurer's report that gives the results of the most current period. We certainly are talking about budgets here, and certainly you're going to have financial statements that are required to do the tax return and probably do your cash flows. We actually have in our bylaws, if we're going to put on a ride, we've got to provide a budget. It's got to be approved. So you could have a need from your bylaws that mandate a budget. And then there's some compliance issues that you may want to be aware of. Budgets, you can have comparative financial statements to assist in planning. We had a concept, what we call the triple play. I said we had 3 rides. So we said, well, gee, if you pay for all 3 up front, we'll give you a discount. The first year we got 45 people to do it. That was about 4 years ago. We skipped a year and then did it a year ago, and we only had 8 people. So we probably won't be doing that anymore, but that's an example of where you can kind of use that historical information to help you make decisions on what you're going to do. Review the impact of club actions. I'm going to have some specific information, but certainly we saw from the prior slides that online newsletters are probably a thing of the past. Certainly you can do some forecasting with a budget, such as we would do for prospective rides. You may need to monitor minimum account balances. Our bank has a $7,500 minimum balance that we have to maintain if we want to avoid certain transaction fees. So we kind of set a benchmark to never go below that number. And then you can also use your budgets to help plan what your charity is going to be and how you're going to support advocacy, whether it might involve situations where you would become a league 100% club. Another item that budgeting will help you with is your taxes, and here is where you need to know what kind of a not-for-profit you are. Are you a 501c3, 4, 7, and if so, are you aware of some of the constraints associated with each of those? We get kind of confusing responses to the survey when, at least confusing in my mind, when clubs say they're not incorporated. So the question then becomes, if you're not incorporated, you're not a individual, you might be a partnership, but if you're not a corporation, you're not going to be able to take advantage of the limited liability afforded to corporations for their officers. And then, given your filing status, do you know what files to form? If you're not for profit, you're probably doing a 990, and if you're not, you're probably doing an 1120. And then the question comes up, well, do you file a tax return, and do you know why? Well, up until this year, there's a 25% gross receipts test that is important to understand. Gross receipts test defined for not-for-profit are the total amounts an organization receives from all sources during its accounting period without subtracting any costs or expenses. So basically that means don't net items, and I'll have an example of that to help illustrate that coming up. It's a little dated perhaps. The gross receipts test should be changing for 2010. But up until now, it's been if you had gross receipts of less than $25,000, you didn't really need to file a return. In 2006 to 8, somewhere in there, they came up with the 990N, which is an electronic questionnaire of about 8 questions. If your gross receipts are 25 to 100,000, then you need to fill out a 990 EZ, which is 4 pages and maybe just a handful of schedules. And if your gross receipts are over $100,000, then you need to file a full-blown 990. And like I say, if you need to check those as soon as they come out with this year's publications, because according to one of their publications, though, that 25%, I'm sorry, the 25,000 is going to go to 50,000 for 2010. So resources that you might want to avail yourself of if you're just starting out: publication 4221, Compliance Guide for 501c3 Public Charities, I think was very informative. It gives you a good overview of some do's and don'ts and some good concepts to make sure you're incorporating in your organization. And after that, then Pub 557, Tax Exempt Status of Your Organization, is a good resource. And it actually lists out all the 501Cs that you can be. It's 1 through 19, 20, 20, there's a good 20 of them. And they all have different attributes, and they're all for different purposes. And if you do decide to become a 501c3, then the way you do that is you file a 1023. So there's a package to assist you with that. Okay, so how do we start this? Well, we're going to go from bookkeeping to financial statements. And basically, everyone should be maintaining a check register as you conduct your affairs. And then each month you will get a bank statement, and then on that bank statement, more than likely, you're going to need to add some items that may not have been in your check register until you received your statement, such as bank fees. If you are running debit cards, that activity will post to the statement, and you may not be aware of it until you see the statement. And certainly you can have, in today's environment, ACH, automated clearinghouse postings. We see those in the form of our Wild Apricot fee, which is the membership software that we use, as well as we do all of our payments to American Specialty through their online ACH debit feature. So then once you get all that activity recorded into your check register, then you're going to need to sum it by some sort of a criteria. And I chose that specifically because there's going to be a couple of different perspectives that you're going to need to look at your data. And then once you've got your monthly information, you're going to need to do an annual. That just rolls up your monthly report, again, by some criteria. And then it is usually pretty helpful for you to maintain comparative annual financial statements so that you can see over a period of time trends and impacts of your decisions. As far as financial statements, there's a statement of operation. That covers a period in time. A treasurer's report probably is very similar to a statement of operations. If you're going to have to file an EZ or a 990 full-blown, you're going to need a balance sheet. A balance sheet is a statement as of a point in time. So it details your assets and your liabilities, and I don't know that not-for-profits have equity, but whatever you call capital. And you also have a statement of changes in operation and cash flow statements. Those are all additional statements that can be prepared, but it probably depends on how much effort you want to expend getting that. Okay, so I said summing by some sort of criteria. And if you're a board member, you're probably interested in seeing information on memberships, probably by type, so that you know how many family memberships you have versus individual, and if you have any other types. You probably want to know about your events or your rides, so you're going to have a listing of your rides. You may have other events as far as a picnic or an annual banquet. Those will all be, I think, line items that you'd want to see information clustered on. And then if you sell products, you probably want to know how much you made on each of your products that you've sold, how much you still have, And then if you're kind of the high end, you probably are dealing with grants, and you'll need to track those individually as well. Then moving on to expenses, we need to talk about a couple of types of expenses. You basically have some fixed cost expenses, and those, the classification of those can be the overhead of the club. When you start at the beginning of the year, you know you're going to have certain things that are going to come due, and it's pretty much just the cost of doing business. We have bank fees, web membership service, directors and officers, liability insurance, D&O insurance that's going to be paid for. And then you probably have dues for various organizations such as League of American Bicyclists, Adventure Cycling, your state advocacy group, and you might even have some at the local level. Those membership dues would be a fixed amount, and you would know at the beginning of the year that they're going to come about, so you can add those up and figure out how much you're going to have just to keep the doors open. Variable costs are based on activity or volume. The ride insurance that we pay to American Specialty would be an example of a variable cost, since it's based on the number of riders. To a certain extent, the amount of food that you buy for a ride would certainly vary, but based on the number of riders. And PayPal fees, the number of people that pay for a ride via the internet, incur a click charge. Either the club's paying it or you're forcing the participants to pay it. But that would be an example of a variable cost. Then when you put a lot of that information together and you're trying to make a decision, one of the accounting tenets is that if an event proceeds or revenues exceeds their variable costs, you should continue with the event because it's making a contribution to your fixed costs. Expense categories. A certain amount of expenses I view as just being administrative. They're fixed costs at the club level. As I've said, they represent the cost to keep the club going for 1 year. You can have event or ride expenses, and those will fall into two different categories as well, both variable and fixed. Variable being an example of the insurance based on the number of riders, and then fixed expenses for the events. If you have to rent a shelter to provide for a SAG stop, it's probably a fixed fee for the day, so it doesn't matter how many people come by. So it's just a fixed cost of the shelter for that particular event. It doesn't vary. You probably give money to various charities, either LAB, your state bicycle advocacy, you could have a local advocacy group, or others. But those would be an cash outflow for the club, as well as any products. And like I say, if you're doing anything with grant money, you'd be tracking the grant expenses by the grant. Now, when it goes to file your tax return, we have different looking criteria for sorting our transactions. On the revenue side, they are concerned with how much money was received from public support, how much was received for your exempt purpose activity, and other revenue, which would include unrelated business income tax. On the expense side, they have program services, fundraising, operations, joint cost allocation, and excess benefit transactions. So when you look at those two, they don't really look alike, and in some cases they may not be. So when you're going to decide about a package for doing your accounting software, you need to make sure that it contains enough infrastructure, codes, whatever, so that you can slice and dice for both of those needs. So your accounting options, you could be doing manual books. If you're a small club, you're probably just looking at a check register and probably not a whole lot much more than that. You then probably would progress to doing spreadsheets. You can do macros to roll information from month to month. We're going to talk about pivot tables. Downside is with the spreadsheet, there's no automation of reports, so fairly easy to implement, but a little more work in the long run. You can use accounting software. QuickBooks would be an example. They typically provide accounts and categories to some by a criteria. If you use that, it's much easier to reclassify transactions, and they normally have built-in reports that can be ran that will probably get you close to what you want as far as output. And then the next level up would be online accounting software, and again, QuickBooks you can run as a I call it service bureau, but it's online. All your files are online, so you don't have to be as concerned with backup as you would if you were doing on QuickBooks on someone's hard drive, and the potential of a hard drive crash and loss of data. The other thing that online accounting software will provide is you can have multiple users at the same time and access to multiple users. So you, if you've got a member or a board member that needs to go out and look and see, how did we do on that last ride, they can go and access it. It's on the internet. It's online, as opposed to if it's on someone's hard drive. That's a lot harder to do. Okay, so we're going to take a quick stop here before we start talking about sample budgets, and maybe go through any questions people may have.
I don't have any questions or hands up right now. If anybody has anything they'd like to interject at this point, type us a quick question or put your hand up.
Okay, well then I will keep going because we do have some questions at the end that we can go over.
Okay, great. Thanks, Ron.
Okay, we've talked about, I briefly mentioned the pivot table if you're using spreadsheets, and the survey that we had from the November 3rd webinar indicated that 35% of the people knew what a pivot table was and can do one, which meant 65% of those people did not know what it was. Well, in a worksheet, in Excel, they have a feature called pivot tables. And what it does is if you've got your information in a transaction structure by date, so you've got name, amount, event, and date for, like, Scott, $25, ride 1 on January 1. Then Mary comes in, pays $25 for ride 1 on January 2. Dan comes in on January 3rd and pays for a membership and pays for ride 1. And then Ron comes in on January 4th, pays $25 for ride 1. This must be a club in Arizona because I don't think too many people are doing rides in January anyplace else. But what you really want to know from all that transaction stuff is you want to know that, well, ride 1 has 4 riders that paid $100, and we've had 1 membership sold for $20. So what it does is it collapses the information based on some criteria that you set. So you say, I want to sum the dollar amounts for all ride 1s and all memberships, basically on the event column. So that's what a pivot table does. And an example of where you would use that, where we use it, is to download PayPal data so that we can get the gross, the fee, and the net amount. We also use it to roll up financial statements if we're using a spreadsheet. So it can be used for any download of transactions where you desire to sort with some subtotals. The downside is a small downside. You can't record a macro in Excel to build a pivot table. You must use Visual Basic for Applications, VBA. and I've got the macro if you ever want to use it. It keys off a column O, which has the transaction title in it, and there are some limitations. It's not a cure-all, but it's pretty good. And I don't want to actually go through running a PayPal because it doesn't lend itself to this webinar configuration because it would be too jerky. However, I do want to go through an example that focuses on this particular transaction. A PayPal example. If you have a ride for $25 on PayPal, you'll incur a $1.02 fee, and the net will be $23.98. So what you put on your financial statements at period end from this transaction should be event proceeds would be $25, and then on a separate line item you would have PayPal expense for $1.02. What would not be the correct way to disclose the transaction would have event proceeds at $23.98. And the reason why is you've just understated your gross receipts test because it said before any expenses were subtracted. So you want to record information gross. By netting it, you would have lost what you're paying to PayPal, and you probably would like to know that. The other point I make is it's pretty easy to do because the $23.98 is actually what hits your bank statement. So someone might be tempted to say, but that is all we got. But that's not entirely the way you should account for it. So to show you how easy this is, here's Kansas City Bicycle Club's actual treasurer's report from February of this year. And if you look at memberships, all sales, $236.78. And if you recall from a prior screen, our memberships are in increments of $5. So it had to have been no pennies. So by looking at this, if you understand everything that we've said today, you'd say, he netted the darn fees from PayPal against the revenues, and he's understated his gross receipts test when he goes to add that up at the end of the year. So it is easy to do, and just be careful. While we're on kind of being careful, I just wanted to interject an accounting concept, segregation of duties. And a lot of companies, hopefully everyone's heard this, but focus on segregation of duties as an internal accounting control procedure. They spend a lot of time making sure that you've got checks and double checks, and very appropriate, worthwhile endeavor. However, it's very difficult to do with small organizations because you've got one treasurer and nobody else really wants to muck with the stuff. So what I'm proposing is that you have an alternate procedure, and that is review the bank reconciliation. And the reason why is you want to confirm that the cash is in the club account and not somewhere else. And I think by reviewing the bank reconciliation, you'll be able to do that. Okay, next thing I want to move on to is just to talk a little bit about pricing strategies, where we were looking at some things. And in 2001, we were looking at our financial records, and we had a pay ride that was priced at $17. And then we had a bunch of discounts. And it ended up that a rider could pay as little as $3 for the ride if they applied all these different discounts. One of the consequences of that was we had to supply the people at registration with about $400 in $1 bills just to make change. And the ride nearly didn't even make that much money. So what we decided was, gee, let's make this easier for everyone, and let's just price things in increments of $5 and limit discounts to 1. Okay, so when we kind of carried that forward in 2009, we actually raised our prices $10. We were at $20 and $25 with a $5 discount for advanced registration, And we decided to raise those $5 in all rides and another $5 if we offered lunch after the ride. So we had 3 rides. One of them didn't have a lunch, so it just went up by $5. But the other 2 that we did supply the lunch after the ride, they went up by $10. And after we got done with our rides this year, we had 50 more at each ride, even though we raised the price $10 on each ride. So you econ majors can go back and brush up on your elasticity of demand formulas. Okay, we're talking about budgets, and what I can't do, okay, there it goes. What I can't do easily in a webinar through PowerPoint is really give you all of the financial statements, or I can't display them on one screen. It would be so small you couldn't read it. So what I have here is I've stripped off at the top our membership revenues, and then I have our expenses, and these expenses are what I call administrative, or those that are going to be there regardless of whether you put on any events or not. So administrative expenses and revenues. And I've got a couple of things here that I want to kind of point out when you're looking at financial statements. The first thing you'll notice is there's an average column off to the right. And I have that 10,068.36 down there at the bottom. And that's the average of the column of numbers above it. But that's not really an average that's going to be of any value, because like if you look at advertising, we only did that in 1 year, but in 2007. But the average column has $300, so we had it occur once in 5 years, but yet I'm using the average formula in Excel, which is not counting the other years. It's taking the 300 divided by 1 instead of 5, because the other years didn't have the expense. So I'm overstating my average if I use that $10,000 number. If I take a cross-footing of 2005 through 2009 in the total column, I come up with the 7,804 number, which is the proper number really to use as far as the average. So when I do this to display the ability to put together a worksheet that can lead you to incorrect conclusions. So watch how you do your sums and your averages. This is a comparative financial statement. I've got 5 years here. And one of the line items in the expense is newsletter. And in 2005, we paid $4,200, some change, for the newsletter. And then in 2006, we paid $4,008. It's going up. And our memberships, if you look up at membership revenues, it was $4,000, it was $4,003. Well, we decided in 2007 that we weren't going to print a newsletter because it was just too expensive. It was more than our membership revenues. So we didn't get shut down until, I don't know, quarter of the way through the year. So I still had a little bit of expense in 2007, but look what happens to my revenue. In 2007, I go down to 4,000, then I go down to 3,005, then I go down to 3,003. So is that the result of not having a printed newsletter? I don't know if I know that or not, but there's a correlation there. What I do know is I discontinued an expense that was over $4,000, and I'm now able to spend that membership revenue where I want to, as opposed to spending it for a newsletter. The other thing here that we're going to come back to and talk about a little later on is in 2005, I spent $4,818 under the trailer, on the trailer row. We bought a trailer to haul all of the stuff we have around, and remember that, because we're going to come back to that in a couple of screens. So again, KCBC bylaws requires a budget to be presented for each ride for the year. So you can use your historical information when you start to project your future activity. Consider some spreadsheet models. And so here's 2009. And now here I've stripped out just the part of our financials for 2009 that relates to one of our rides called the Summer Breeze. And in 2009 we had, I think it was 350 attendees. And that resulted in an average rider revenue of $24. Again, this was the year when we had it priced at $20 and $25 for the ride. So at the start of 2010, we said, well, we were going to raise our prices. So we said we were going to raise it by $10. So it was going to be $30 and $35. So I have an average rate in there, $32.50, figuring it's going to be, somewhere in the middle. And we didn't figure we'd get as many riders. We tried to be conservative. So we said, well, we're going to take the quantity of riders down to 300 and not use last year's number of 350. We have a shelter where we rent. It's $25 in 2009, and the budget we put in $50 because if you are a resident of Raymore, they will rent you the shelter for $25. So I didn't know if we were going to have a resident from Raymore available to rent the shelter, so I put it in at the higher rate, being conservative. You'll also notice that I tried to split out food between SAG food and the lunch meal. We didn't have it done in 2009, so I didn't have a way of really doing that. I've got the insurance expense. Probably everyone's familiar. It's $1.49 per rider, and then miscellaneous other stuff on down through there. Well, when we actually got done with the ride, we had 405 riders. So it really came through that price wasn't so much of an issue here. The $25 for the shelter rental, we did find a resident of Raymore to rent the shelter for us. And going back to your membership tracking and using systems like Wild Apricot, we knew we had a high pre-registration percentage. We were over 200. And so the board members are sending emails back and forth, oh, we got to buy more food, we got to buy more food. So we actually went out and bought more food, which is why you see it as high as it is. It's significantly above what we had budgeted. But I still managed to feed people for $2.58 a head for their lunch, which is lower than the $4. The other number on here that you can look at is at the beginning of the year, the lab had the session on American Specialty for the insurance, and I think I don't remember the exact month, it's been February or March. They came on and said, well, when you pay for your insurance, you only need to pay for your non-members. So that meant the 405 total riders, 321 were non-members, so that meant I saved on the insurance. And again, here I'm tracking my PayPal expense. And, the rest of the information is fairly insignificant. The one thing that I have noticed in what I'm in a little bit of research, we made $8,000 on a $12,000 event. So our expenses were 32%. That seems to be a fairly low percentage. I've looked at some other clubs, and I would encourage people to look at your own numbers, but our next goal would be to become a 501c3 with the hope that that food for SAG and food for meal would be donated to us. And if that's the case, then our expenses would drop down to the 15% or so range, which means, we just have more money to give to lab. Okay, so the next screen is, again, a slice from our comparative financial statements that I want to show and demonstrate a particular concept that goes back to Mary Dirk's presentation on planning your strategy. This is the 5-year listing of all the charities or giving that we've made, and it basically has listed 19 different entities. And I would argue we have no plan at all, no strategy in place for how we give money away. And I don't think it jumps out to you as much until you look at a comparative financial like this and see that you have no strategy. And this is the thing that attending the first conference that I did in January in Boca Raton was, you should be thinking, you should have a strategy, and one I think that appeals to me is you should be giving at the national, state, and local levels because they all need the help. So that was number one. Number two, you'll see in 2006, may not show up very well, but we didn't give away anything. And why is that? Because in 2005 we bought that trailer and there was no money left. So you can look at this and you can say, well, okay, knowing that makes sense that you didn't give anything away. Okay, so long-term strategies, plan your charity giving, consider giving to the national, state, and local levels. Be aware there's a 100% club capability from the League of American Bicyclists. We have a state advocacy group in Missouri. There's also one in Kansas. Kansas City is just now working on a local advocacy group that will basically cross the state line here, because Kansas City is a twin city. There's Kansas City, Missouri, and Kansas City, Kansas, and several cities in the greater metropolitan area. So they're just now, matter of fact, it was last night, they had their kickoff meeting, and they've got a matching grant going to get the organization started. So those would be three things I would suggest that you consider. And then the other thing in doing this is, if you're doing your budget, I would suggest considering giving percentages of your event proceeds rather than a fixed dollar amount, because if you get rained down on a ride, you could end up with a commitment that would result in a negative cash flow, as opposed to if you say, I'll give you 30% of the proceeds off this ride, then if it rains out, then you've got some downside protection. Examples of this: our membership is currently $20 for a individual membership. The lab fee, if you chose to be a 100% club, would be $15, significantly less than if the members went and did it on their own. The other thing that would be a factor in the membership fee is you have a $1.49 annual fee to pay for each member. So that means that out of my $20, I have $3.51 left, and that could be applied to the fixed expenses of the club. So I'm not doing a newsletter anymore, which was over $20, so that's no longer a factor. So now I've been able to, as a result of not printing a newsletter, I have an option here that I didn't have before. A potential budget plan might look something like, again, pay fixed fees from a % left over of your membership fees and event fees. You could give to lab via the 100% fee tied to membership dues. I could give to my state advocacy group tied to one of my rides, perhaps the Summer Breeze at 40%. And what we did do last year was we gave to KC Trails and the Park Parks Department, 20% each from our City of Fountains Bicycle Tour. Other rides and events can go to the club. And then here I added a frame to kind of break out what it might look like for 2011. Okay, we've got our membership at roughly $4,000. Lab would get $15 of that, so that'd be $3,000. I have the 3 rides listed, the Fountain Tour, the Summer Breeze, and the Tour de Blue with the gross. I've got the costs associated with those rides, again at about 30% or thereabouts, so that I have a net, and then I would be giving to Casey Trails and the parks. I could do my state advocacy group, and we actually have a racing team, so I need to allocate some funds for them. So basically I would have, out of the $20,000 net from all of my events, I would have $10,000 that I'd give away, which would leave $9,790 for my club fixed expenses. And here I've detailed those out. I am projecting those to be about $7,058. Directors and officers insurance of $875. Insurance for the members would be about $522. My dues to Lab, Mobike Fed, U.S. Cycling, Adventure Cycling, and a P.O. Box, those amounts fall in. Since we have the trailer, unfortunately, we also have maintenance of the trailer. There's maintenance, there's property taxes, there's insurance, so we budget a small amount for that. Postage is way down from our comparative of prior years. I know I'm going to have some PayPal associated with people that pay through that mechanism. We normally have about $100 in bank fees. Our wild apricot service will probably run us around $1,300. We have quarterly meetings that we usually supply small amount of food on. I'm proposing we send 2 people to the Bike Summit in Washington, D.C., and we have a banquet that we don't usually cover costs on. And then the other thing I want you to notice is by that $3,000 for the Bike Summit for 2 people to attend, there's an 11% number. That $3,000 divided into my $27,000 for gross receipts equals 11%. So under the most conservative interpretations, if I considered all of the $3,000 to be lobbying, and if I were a 501c3, and if I made my Section H election, which is based on dollars at 20%, I'm okay at 11% sending 2 people, because a 501c3 can't go over 20% of its gross receipts under Section H. So I'm okay at 11%, but if it rains on all my rides, then that 27,000 goes down. That 11% could grow pretty quickly. So, but I'd still be a little conservative, because I don't think even the IRS would say that the total 3,000 would be attributable to lobbying. And Scott may have some opinions on that as well. So with that, we'll take a short break for questions, and then I have 200 or 300 more slides, which we'll cover in the next 4 minutes.
That sounds good. Actually, Alan Forkosh from Grizzly Peak Cyclists in Oakland, if I've got all that right. Hello, Alan. You wanted to say a little bit about how Grizzly Peak structures your donations, and I'll post a couple of links in the chat window for people.
Yes. Grizzly Peak, essentially the way we do it is we budget out. We don't really decide on a number until after we have one nature ride a year. We decide on the number we're going to do for donations for the year after that ride. Because we've done this for several years, we obviously have various groups that we normally give to, and during the year, frankly, we let folks know that we do all our donations once a year, and various groups make presentations to the club throughout the year. We then have a procedure of going through a committee to essentially dice up the number. We've gotten it down so that sort of like the way the multiple vote system works. We essentially let everyone sort of devise their own way of doing the pie, and then we come up with a consolidated average from that committee. We go through some club procedures to make sure that the club actually approves of it, and then we write the checks. And for example, I believe we just did that last week, and I think LAV just got it this week. So it definitely gives us some regularity in how the donations are done. And I probably say I posted on here if you're interested. We have it documented. We don't have the current numbers for this year online yet, but you can certainly see how it's evolved through the years.
Okay, great. I'm not sure if I posted the links as I just answered the questions. I don't know if that's going to continue to the recording, so if people listening to the recording want the links, it's http:// Huh?
Oh. I was just going to say the easy way to do this, frankly, is if you go to the base website, www.grizz.org, and then you'll see there's one of the spots on the page is donations. That will give you the summary, and from there you can also get to the procedures.
Awesome. Thank you very much. Sorry, was there more to add?
No, that's probably. I'm just saying that's probably enough, for the recording.
Okay, awesome. Thank you very much. And then, Ron, we have another question here. Do you ever account for ride receipts by members/non-members in order to decrease gross receipts from non-membership sources?
We have that detail, and we can make that breakout. In fact, I have to have that detail, or I wouldn't be able to have made the calculation I did on that one slide where we knew that we didn't have the 405 as members. We only had 300 and something. So, yeah, we do track that information. And you've got a couple of ways to track it. You can track it by the dollar amount based on the day that they paid, or you can track it by the box that they checked on the form that we have. And I know we had 21, I think it was 21 people on the Summer Breeze did not fill out the form to where anything was available to use as a indication as to whether they were a member or a non-member. So what I had to do was to take their names and look up in our membership roster whether they were members to get the 21 resolved.
Okay, and I think Alan had a point on the lobbying expenses as well. Alan?
Yes. On lobbying expenses, for the IRS determination, it is a little tricky. The Section H determination is not receipts. It's percent of expenses.
Oh, okay.
I've just gone through that I'm the treasurer of one of our statewide bicycle coalitions, and I just had to sort of go through that type of computation.
Okay. Thank you. I knew it was the 20%, and so yeah, that helps. That would actually, of expenses.
Yeah, chances are one of the things we, frankly, in statewide level is, for example, if you were coming close, you might just decide to spend some money on some things you need to do for 1 year if it was getting close to the 20%.
Buy a couple more trailers, maybe.
Right. Well, in our case, it's the statewide coalition, basically, push our purchase order of our inventory of bike law pamphlets,
Yeah. Kind of like making your fourth estimate in December instead of January.
Yeah, but it's basically, it's a little bit more under your control.
Okay.
Well, that's good.
All right. Do you want to continue on cost-benefit reviews?
Yeah, I've got a couple of other concepts here I just wanted to kind of go over. We have a card. It's 1/4 of an 8.5 by 11 that we had printed up. That's why it's called 4-Up. We found a place on the internet that would produce a very nice double-sided glossy color stock card 5,000 for $120, mailed to us. Don't know how they do that, but hey. And so we distributed those to our bike shops and to triathlons and other rides. And then one of the features that our membership software has is it will allow us to take a survey when people register for a ride. So here is a result of that, and you can see that 12 people said they found out about the flyer. They found out about the ride through the flyer. Well, you can do the math, but basically it comes out being barely, it's $330 revenue derived from those 12 people, so $120 is well spent because this was one of the 3 rides that the card advertised to save the date. And so if you extend it, maybe it's $550. So basically, you can do some cost benefit review with taking a survey and watching your costs. The other thing on that prior screen was we had 34 listed as other. Well, scrolling down here, the next poll we did, we expanded it a little bit, trying to learn from our mistakes, and so we added, more options. And it turns out that when you summarize this data, the one ride where we had 34 or 15% of the respondents say other, on the Northland Nightmare ride, we were able to get that 15% down to 6%. And basically the bulk of it going to Facebook and 2 other online options. So the bulk of our marketing, if you will, is coming from basically the web. 25% from the website. We're sending out 22% to emails. And again, you can kind of see a pattern here. Those numbers are getting somewhat consistent. So that was always good to see. The second thing that, as far as the cost benefit of looking at numbers that I wanted to bring up was in 2005 we paid $5,000 or thereabouts for that trailer, and it's where we haul the water jugs and the tables and the coolers and the easy ups and all that stuff. We lend that trailer, not rent, we lend it to about 10 other rides in the area. So the MS-150 borrow it, there's an AIDS ride, there's a cancer ride, there's a bike for the brain, the tour to barbecue. There's actually a run, what's called the Brew to Brew run that goes from Kansas City to Lawrence. And we also provide them sometimes volunteers. And the reason we do that is in return for that equipment lending, we ask for volunteers from those organizations as well as access to their mailing list so that we can, again, hit more people and hopefully draw them to our ride. So all of that to say, try to use your financial statements. Historical information is good to know for future plans. Downside is it means somebody's going to have to track all that stuff and get it recorded and brought back to folks in a manner that they can digest and make decisions on it. Plan your activities. Know your club's fixed costs. We've talked about doing pricing reviews and then having a safety cushion for failed events. And that's pretty much everything I had to talk about, so we can open it back up to questions, and I can actually go to some questions that were submitted if there are none.
One question here, whether we'd be covering accounting for cash or materials donations by members or non-members.
Cash from material donations?
Cash or materials donations. And I think maybe splitting it out for members or non-members. Roy, do you have a microphone? Did you want to elaborate out loud? See if he says. Hello? Do you have a microphone, Roy? Oh, no mic. Okay.
Well, again, that's going to be if you're needing to track that, It's just a matter of allocating a bucket for it and keeping the information correctly recorded. So we haven't. We're fortunately in that under 25,000 gross receipts test, so filing a tax return isn't as critical just yet. But if you are and you need to track that, then it's just a matter of, if you're using Quicken or something, or QuickBooks, having accounts set up to track it and keep it separate.
And Roy is saying they're a 501c7 in a small club, so 15 to 35% of gross is a small amount.
Okay, I've got questions for you. Are you doing pay rides? Has he answered back?
I will tell you as soon as it pops up. Yes, pay rides.
Okay, my understanding is that if you're a 501c7, that you have a limit, a cap, on the amount of gross receipts that can come from non-members. So, and it's at 35%, if I remember correctly. So,
yes.
How are you having much of a pay ride with that?
I'll let you know if I see an answer. Maybe this would be a good thing that you and, let's see, last year RIDE was 50% of receipts. You and Roy could also discuss this offline via an email exchange.
Yeah, that would be fine.
It's a pretty inefficient way to discuss like this. So maybe you can take this offline, and if other people are interested in the answers, we can email the answers around to the other attendees.
Okay. So you want me to go through the November 7th questions?
If you had a couple of questions that you thought were particularly good, we could go to those. I think we could probably try to wrap this up in the next 5 minutes or so. If we don't have any more questions from the group that we have here. I know I've already got one person mentioning that they have to get going.
Okay. Okay, so one of the questions was, does PayPal download into a pivot table? And my response is, no, not exactly. You download the PayPal transactions into Excel, either as an Excel format or a CVS, comma separated file, CSV. And then once you're in Excel, the pivot table is a feature inside Excel. Another question that I thought was good is Wild Apricot more economical than Active.com? And I think the important thing there to notice is that these are not comparable systems. Active.com is like PayPal. They both provide a way to collect money from the internet for events. Wild Apricot is an online membership system with web hosting and other features. So I would say Wild Apricot should be compared to other similar software providers such as Club Express or Z2 Neon, which was both were explained in the membership webinar. And does KCBC absorb the cost of Wild Apricot? Yes, we do. It's again, it's one of the things that was presented in the membership webinar, that the advantage is you've got one system. You don't have the next officer coming in and doing it their way and switching between Excel and Access or some other database structure, and it has links to PayPal and credit cards, so it's more integrated. And let's see if there's anything else there. I'm scanning through here, just looking to see if anything. That's. Do you take depreciation expense or write off all equipment within the year? I think you're going to have to reference current tax laws to find out the limits on what has to be capitalized and expensed and over how many years. I'm not going to know that.
Okay, well let's I think we can wrap up with that. Ron, once again, thank you very much. You've done so much for our club webinars this year. We've got another slate coming up next year, and I know that you'll be involved with at least some of those sessions. We've got that posted on our website. So, again, thank you very much, Ron Pewitt. Thank you very much to SRAM, whose generosity is helping sponsor these webinars. And thank you very much to everyone who came and participated tonight. Hope to see you, as it were, in another one of these very soon.